Okay, this is the pre-scene analysis June 2021 examination. I think this is the first time I am doing a pre-scene analysis with you all under the webinar series. Then it may be the good experience to you all. As per my experience, as per what I can see, I have analyzed the pre-scene, but please bear with me. Maybe these things are not tested in the examination, but the some cruel things, some the special things I need to communicate to you all from this. But lamai, it may not tested, may be tested, may not be tested. Okay, it's like in a coin two side. Okay, then what's your company? Your company is the College of Business Education Private Limited, CBE. Till your examination, this is your company. For your, or if you are doing 4 subjects, if you are doing only this subject, for whatever case, till the end of the 3 hours and whatever reading time, that minutes in your, this time is online, in the online examination, till that point, you are submitting your paper to server at that time. This is your company. This is not my company. This is your company for your examination. That's the first thing. You have to feel it first, lamai. If something happened to this, if the one building is constructing, there are loans taken and one shareholder is going to leave from the company, then these things should be affected to you because this is your company. That's the first thing. And why I have told like this, the information given in the pre-scene analysis including industrial information. The some students are not reading this industry information, but lama, you should have to have the industry knowledge. You should have to have the industry knowledge. Therefore, that industry information also you should read, because this industry information is given for your own benefit. If not, you have to search and Google it. You have to Google it, you have to search it, you have to read. But in the pre-scene, this particular document, even the industry information has given. Therefore, all the pages of the pre-scene is critically important for your examination, and you should remember these things in the pre-scene. The pre-scene, whatever the background information, you should know at least before the examination, at least 5 times you have to read the pre-scene, at least. Then more than that, it's superb. Then come to the analysis, the company overview. I'm taking first the background information of the company. Secondly, I'm taking the tax perspective on behalf of the pre-scene. The given information, what could be happen in your unseen, I'm taking, but it may happen and may not. Okay, it's defense, but I'm giving only an insight. Make a mataka tiyagenama gihilla, make end morning, don't do like that lamai. I'm not a fortune teller. Then therefore I'm analyzing the pre-scene based on the your 100% of the syllabus area. Okay, then name of the company is the College of Business Education Private Limited, CBE. This time is the educational sector, service sector, which is one of the straightforward pre-scene. Okay. Nature, principal business activity is the providing of educational services. It is a sector, it is a service sector. Date of incorporation of the company, it has not given. We will see at the maybe at the examination some dates. If these particular areas tested, they shall provide it. They shall provide. Co-founder, there is a co-founder, Mr. Manilal D'Souza. Then location of the CBE, I am using the word after that, CBE, with reference to College of Business Education Private Limited. Then it's a head office in Colombo 3, and there are 7 branch office outside Colombo. It's the nature of the educational institution. Even we have taken it's a chartered institute, we have the Colombo, this head office, as well as we are having the branch office around the country, the outside the Colombo. Then you should keen about this head office and the 7 branch office, that the structure you should have in your mind. And when it comes to lamai the patrical situation or patrical scenario of this, we have a lot. In patrical situation we have a lot, but I'm not going to tell, but you know, based on the information provided, there are patrical, the educational institution with this kind of the co-founders. It has founded into Sri Lanka that kind of the good educational institutions. Okay. Then what is the product portfolio and the percentage of revenue? It has given in the PRESEEN in the 2.3 paragraph on the product portfolio, and I have summarized it with the product and the percentage of revenue both. It is undergraduate education 20%, postgraduate education 30%, professional or executive education 35%, short courses 15%. Now lamai, by looking at this, it's all together the 100% of the turnover from the educational, the providing of educational services. But it's come to later on, you can see that the wherever in the latter part of the PRESEEN analysis, or the rather given PRESEEN, it has given the different type of the like hostel income, like in that kind of the income also given. But more or less as per the information provided in the PRESEEN, I am repeating, strict to the information provided in the PRESEEN, it seems to be the turnover, the majority of the turnover is from the providing, or this 100% of the turnover is from the providing of educational services. Therefore, please keen on that turnover and the product portfolio. And then company overview. Next I need to come for the shareholding structure as at 31st March 2021. You can see lamai, the shareholding structure is given in the paragraph 2 under company overview. In that, see, all are individual. In that, the Manilal Desoisa 40%, Jagat Desoisa 10%, the Lakshmi Desoisa 10%. All these 60% of shares or share ownership goes to family members, and there is a so-called investor which is friend of the Manilal Desoisa, Lalit Kiriella. He is belonging to the 40%. Okay. Then number of shares. It's given at the 6,250,000 number of shares given, and the value per share it has given 100 per share. Now you can see when looking at the PRESEEN in the financial information lamai, you can see in the financial position, see, stated capital 625 million. Okay, then that part has completed. Okay, then I will come to this, why this 40% and all. Then for up to now, let me remove this. Done. Then we will come to the next one. You should remember the value of share and the number of shares. If there are any change in this shareholding, this number of shares and the value of shares are critical. Then I am starting the looking at the perspectives, which is a tax perspective of the PRESEEN analysis. This is one of the straightforward PRESEEN lamai, but there are key things to look at. Income tax. When it comes to income tax, your core is the Inland Revenue Act number 24 of 2017, and the transitional, if it is from the previous act, something is testing, the act number 10 of 2006, if something is testing, it's according to the transitional provisions gazette notification number 2064/53. But amendments to the Inland Revenue Act with effect from 1st Jan 2020, please understand, it is lamai, it is what? Not applicable for June 2021 examination. This is not applicable for your examination. Please keep that in your mind. Okay. Then the next tax perspective, we need to look at the value added tax. In the value added tax, up to Act number 19 of 2019, all changes are subject to your examination. The main enactment, Act number 14 of 2002, and the subsequent amendments up to Act number 19 of 2019, and the Gazette notification number 2151/52 dated 29th November 2019, which is the rate has changed, and they confirm the rate for the VAT on financial services as the 15%, normal VAT rate as 8%, and the zero rated supplies, which that hotel part it has defined. Then everything is in that Gazette notification, and you should know exemptions from the value added tax. Then nation building tax. Why am I nation building tax important? Because in the PRESEEN, in the financial information, it is accounting and finance under paragraph 3.2. As the last paragraph, they have provided CBE has registered for VAT and NBT. Clear? Therefore, it's critical to know about the provisions of the NBT. Next, we will start from the possible things, which is under, first time is starting from the Inland Revenue Act number 24 of 2017, which is tax rate. Then in that first one, income tax rate, it is 14%. Why 14%? According to the information given in the PRESEEN. Okay, why it's a 14%? As per the first schedule, item 4, subparagraph 2, that's subpara E. Why 14% of the reduced tax rate? Is it under small and medium enterprise? No. Why it's not a small and medium enterprise, Lamai? Come to your PRESEEN, that original document. In here, if you can see, when it comes to the revenue of the company, it's a 1 billion. Is it less than 500 million? No, it's 1 billion. 1 billion. Therefore, you cannot apply the SME. Why? It has very clearly given that it is it under small and medium enterprise? No. Why? Revenue of CBE above 500 million rupees. I think it's clear. Then why it's 14%? Reason is predominantly providing educational services. That's why it's in the first schedule, item 4, subpara 2E. Clear? Then here, as per the revenue detail provided in PRESEEN, I have highlighted it. Because in the, I am telling this according to PRESEEN, but I don't know what happened in the unseen. According to the information provided in the PRESEEN, the rate is 14%. As discussed under company overview. Then can you remember, under the company overview, we have discussed that it is the product and the percentage of the revenue. Accordingly, it is the 80% or more turnover is from the providing of educational services. But please, I am telling in the unseen, if there are any change in the revenue proposition, please take the turnover from educational services, turnover, the total turnover, please multiply by 100 and look at what is the percentage. Is it 80% or more? Then if yes, 14%, if not, then it's 28%. Please look at this under the unseen also, because revenue proposition, in the breakup of the revenue from the number crunching wise, it has not given. Therefore, please look at this in the when it given at the examination in the unseen. Okay. Third point, I have highlighted it because I am not taking the chance. However, if in the unseen, if revenue percentage breakups given, different to pre-seen, please check the percentage and apply the correct tax rate. Now you can see if you have the information, then let me show that. If you have the information, I mean this is revenue, then the percentage of the revenue has given here, the percentage of the revenue has given, then you can where it's 0.3, yes, then from total turnover 20%, 30%, 35%, 15%, likewise you can take under this category. Then if anything is different to pre-seen, if it has given in the unseen, please apply accordingly. Then the next one, possible issues. I am starting with the possible issues. These are not the confirmed issues, these are which can be happen in the examination. Tax perspective, possible issues may pre-seen to unseen. Okay, it should be, it may pre-seen to unseen as per the given information. Okay, then here the first one is the intention to selling of shares owned by Mr. Lalit Kiriel, which is application to the pre-seen in which para page 2 under the subtopic 1 introduction of the pre-seen. It has given Lalit is a businessman from Kandy and he indicated last year that he wishes to sell his shares in CBE as none of his children seems to be interested in joining the business. Now from 1920 itself, Mr. Lalit Kiriel has in the intention of selling his shares. Then we don't know it's selling to whom, whether this 40% of shares, that's why I have taken here from this 6,250,000 into 40%. It goes to Mr. Lalit Kiriel. Please do that revenue analysis, the number of shares analysis, 40% how much, another 40%, 10. Have that breakup. Then that 40% area or on the share number of shares, then it may be in your unseen, Mr. Lalit Kiriel may sell that shares to maybe this Mr. Manilal Disoisa, maybe Mr. Jagat or Miss Lakshmi or any other third party, no information given. Now what's the tax implication? And there is a suggestion to list the company on the Dirisavi board in future. Even in that paragraph, it has given in the letter of that introduction the part, it has given company is going to list the intention as the business expansion. They are having the intention to list the company at the Dirisavi board. Okay. Then what is my possible issue? This I have think this can like this one can be tested according to given information. In the unseen, it may test under tax planning and business decision making that income tax implication of selling of shares by Mr. Lalit Kiriel, the 40% of shares, if it is sold, 40% of shares sold by Mr. Lalit Kiriel, Lamai tax implication is come to whom? Tax implication is come to Mr. Lalit, not for the company. The person who is selling the shares shall pay taxes. Okay, then tax implication to Mr. Lalit. Second point is, if he has, what is the good point to sell the shares? Then if the shares are sold by Mr. Lalit, then share is what? It is an investment asset. If it is the investment asset, the gain shall be taxed at the rate of 10%. If Mr. Lalit has wait till the listing, the listed shares under third schedule, item H, the listed shares, selling of listed shares, it is what exempted. This kind of thing can be tested as an advice part which you have to give to Mr. Lalit. Come to the answer. And the possible issue number 1, I am not giving the answer, but answer points I am discussing. In the unseen, it may test under tax planning and business decision making that income tax implication of selling of shares by Mr. Lalit Kiriella and suggest the best time to sell. How I can take it, because in the PRESEEN it has given the company is under the thinking of the as the expansion strategy to list the shares of the company. Then Mr. Lalit Kiriella and suggest best time to sell to mitigate the tax implication of Mr. Lalit Kiriella. Then we will see how to answer. Identify that shares are that investment asset of Mr. Lalit Kiriella under the definition of the investment asset of section 195. It is the first thing, lamai. First you have to recognize shares are the investment asset. Eka recognize karagathi naththam etanin ehata meka karanna bෑ. Then what is the tax implication on disposal of equity, private equity shares? If there is a gain, it is gain on realization of investment asset under section 7 subsection 2b. How to compute the gain? The gain should be computed consideration minus cost is equal to gain. How to compute the cost, lamai? When computing the cost, you should take if the shares acquired. That's why I told you the date of incorporation is important in this scenario. If the company has acquired, he also the founder shareholder. Then if the shares are acquired prior to 30th September 2017, then you have to do the valuation. Maybe examiner will give, if this tested, then examiner will give the 30th September 2017 value of the shares, and you have to take that 6,250,000, whatever that amount, the 40% number of shares, and the as the cost that value, and consideration shall be provided. Then consideration minus cost, it is the gain. Clear? If the shares are acquired on or after 30th September 2017, that kind of the valuation is not required. Okay. Cost of an investment asset. If shares acquired prior to 30th September 2017, shall apply the transitional provision under section 203 subsection 4. Accordingly, cost shall be valuation of shares on 30th September 2017. However, if shares acquired on or after 30th September 2017, above provision is not applicable. Okay. Then what is the tax implication? It's a capital gain tax. Capital gain tax, the CGT, at 10% shall be paid on gain, and such tax shall be paid not later than 1 month after the realization, and return shall be filed 1 month after that realization. See, lamai, when you are writing the answer, please write a complete answer. If you have end your answer, the tax shall be, the gain is liable to 10%. Metanin navattan epa lamai. Then after that write, if the gain is 10%, then when to pay? Please tell it to examiner. I know that when to pay and how to file and when to file the return. That complete answer you should provide. Then fifth one, how to mitigate the tax exposure on disposal of shares. This is a tax planning part of the Mr. Lalit Kiriella. As per the information provided in the PRESEEN, if the CBE going to listing, then the best option to Mr. Lalit Kiriella is what? Wait till the listing. Wait till the listing in the Dirisavi board, and after the listing has done, sell the shares. By doing so, no income tax liability will arise. Why I am telling there is no income tax liability, Lamai? Because why there is no income tax liability? Because as per third schedule item H, gain made on realization of an asset consisting of shares quoted in any official list published by any stock exchange licensed by the Security and Exchange Commission of Sri Lanka, it is exempt from income tax. If there is a loss on disposal of shares, it is a capital loss and apply section 19 subsection 5. But if there is a loss lamai, it's from the end of that part. But if there is a profit, this entire story coming. This is one of the key thing which I can elaborate from the PRESEEN, but it's up to the examiner. Then we will come to the next one. Next possible issue. It has given selling majority of, the possible thing can happen, selling majority of shares to foreign university based in China. Then can you see it's in the, where it applicable to the PRESEEN? In page 2 under the subtopic 1 introduction of the PRESEEN, it has given in 2020 a foreign university based in China showed interest in purchasing of a majority stake in the college. Lamai see the word in use, it's used the majority. Then it can be shown as the purchase in a stake of the college කියලා කියන්න තිබ්බනේ. But it has mentioned that majority stake in the college in a normal way, in our common sense, in our business sense. What's the majority mean, Lama? It's a 50%. Is that 50% being a majority? No. It's not the majority. More than 50% is the majority. In normally, if one shareholder having 49, other one has the 51, then we are telling that majority shareholding is with the guy who has the 51. Then think as the same thing. If the Chinese university is going to acquire majority of the stake in the college, stake means in the share capital, then which is now leading private undergraduate and postgraduate education institute. Even they have acquired our shares, the majority, the value of the shares, even they have acquired, what they are doing, Lamai? They are also doing the providing of educational services. The leading private undergraduate and postgraduate. Now you can see our product portfolio here. It's a undergraduate 20%, postgraduate 20%. Our 50% of turnover is coming through undergraduate and the postgraduate. Then even if they have acquired us, even we are continuing the same thing with them. It seems to be. What's the tax implication, Lamai? Possible issue 2. If this occurred in unseen, what is the tax implication? Change in control. Now, I have taken this from the wording of the majority, but it may not correct, may not be correct, but it's better to know and go this section 64 provision, which is change in control. What is this change in control? This has tested in your December 2020 online examination, but not in the unseen question, but in the value added tax, in the not value added tax, it's in the section 1 question 2, this part has tested. Please go through this section and refer before the examination. When the underlying ownership of an entity changes by more than 50% as compared with that ownership at any time during the previous 3 years, the entity after the change shall not be permitted to. This is a theoretical provision as per the section 64. If the company's the particular ownership has changed by more than 50% compared with that ownership at any time during the previous 3 years, the following you cannot claim: carried forward finance cost under section 18, the deductibility of the losses under section 19 subsection 1, and the particular, in the case where the entity has prior to the change include an amount in calculating income in terms of subsection 2, 4, 5 of section 24, which is section 24 is talking about the reversal of amounts including bad debts, claim deduction under those provisions after change, or carry back of loss, which is under section 25 under long term contracts that was incurred after the change to a year of assessment before the change. Then, where a change in ownership of the type referred to in subsection 1 occurs during a year of assessment of an entity, the parts of that year of assessment before and after the change shall be treated as a separate years of assessment. Then it's if it is a change happened, the before the change 1, after the change 1. Then the section shall not apply. This is very critical. Even there the finance cost we cannot claim, loss we cannot claim, that carried back of the amounts in the long term contracts we cannot use, and the reversal of amounts including bad debts under section 2, 4, 5 we cannot apply. But all that 4 parts, even it has told that you cannot claim these things, but there is a condition where these above provisions are shall not apply. This section shall not apply to the partnership or company. Us, we are a company that conducts the same business. What our business, Lamai? We are in the educational service provision. We are educational service provider. Now educational service provider, after change in ownership, even I am educational service provider, business after change, it conduct before the change for a period of 2 years. For the period of next 2 years, if I am, from the date of the change in of ownership, we are conducting for the at least 2 years the same business like we before the change in of the ownership. That's mean before the change in of the ownership, providing of educational services. After change in of ownership, at least for 2 years, what it is providing of educational services. If so, these provisions shall not apply. How to answer? Lamai, how to answer? You should read the scenario and write the answer. It's based on the scenario, information provided in the scenario, and apply section 64 requirement. Clear? That the second, the major thing can be happen in the unseen and it may not be happen. Then third one, listing the company on the Dirisavi board in the future. Now in our so-called that particular top level guy who is in the first paragraph, the Mr. Jagat is the head of business development and international relations. He keen to expand in the business and listing. Now he needs to expand the business also. Then if the expanding a part of the business and the listing the company on the Dirisavi board. When it comes to expanding part, Lamai, maybe like it's a tax concessions may be asked, then you can apply second schedule, sixth schedule. These things you all know much. Then here the listing of the company on the Dirisavi board in future. Lamai, this future thing may be implemented in your examination. Then therefore here we will check. Then this is the first time they are doing this is initial public offering, IPO. Then Lamai, this is what any expenditure relevant to IPO, it is what? Capital nature expenditure. If there were expenditures like that, you have to if it is charged to the P&L, it should be disallowed. Okay. Listing of the company on the Dirisavi board in the future. Application to the PRESEEN, page 2 under subtopic 1 in the introduction of the PRESEEN. Jagat is the head of business development and international relations of CBE. Then College of Business Education. He is keen on expanding the business and listing the company on the Dirisavi board in the future. If there is expansion, Lamai, the maximum part which is a second schedule, sixth schedule, qualifying payments, the concessions, the exemptions, these things. But that part, expansion part with reference to the particular businesses we have done in the previous pre-scene, which is under March 2021 question and the December 2020 online paper question. Please, if you have doubts, please go through that 2 areas. Then possible issue 3. If this occurs in unseen, what is the tax implication? Again, maybe change in control can happen under section 64 if ownership of the company change by more than 50%. From the IPO, the public is buying our shares. In that sense, maybe one of the key stakeholder in the public, if he has obtained 51-52%, then there is ownership change. Then that's a one part, but it's not much concern because we don't know how the shareholding structure going to change. And expenses on listing, this is one of the key thing. The IPO expenses and arrangements to IPO, there should be in your income statement. Tax implications, any expenses directly attributable to IPO, capital nature expenditure and disallow. Section 11. Pai are we going to do IPO for any 12 months period, any 6 month period? No. IPO ekai lamai. It's an initial public offering. Then after that is the consequence or subsequent share issues. Then if there is a process of asset revaluation due to IPO, even now today in the unaudited financial statements in 2021, it has given the 750 million revaluation. If I am not mistaken, it's a 750 million revaluation has given. Then the revaluation charges, the payments to that particular value, these things can be in the C. This is revaluation gain in the OCI, and in the financial position there is a 750 million revaluation reserve recorded in the financial position and the OCI. Therefore, what we can see here, valuation charges, if any, disallow with proper explanation. Only is it attributable to capital nature expenditure. Now, Lamai, you can argue this. First thing is, someone can argue that valuation charge is a professional fee, then it is revenue nature. Someone can argue that valuation fee, what's the nature of the valuation fee? Why did I pay it? I have paid it on IPO. For IPO purpose, I have valued my properties. The nature of the valuation is yes, it is the revaluation. But what's the purpose beyond the valuation? It is due to IPO. To take the correct market value, correct value of my shares, then I have to do these things. If so, it is capital nature. Whatever am I, even one particular expenditure or income, if you are taking as allowable or disallowable, I am always telling the quoted, if you can remember the sections, quoted from the sections. If not, if it is even a main section, please write. If something in doubt under this kind of thing in the section 11, it's an open section, then you have to write your logical answer for this kind of the things. Okay. Then next one, which is the next issue in the pre-scene, which I can see, which is there is a revenue assertion fraud. The revenue assertion fraud, how can it impact to our tax perspective? Come to here, outgoing of money recognized as revenue fraud. Application to the pre-scene, page 3, subtopic 2.2 under human resources. The high turnover among the finance and IT staff was due to certain the alleged fraud brought to the notice of the management. Now, there is the fraud, then it was captured by the management, then the staff members are leaving from the organization. In relation to revenue assertion and collection, now let me see, it has in the pre-scene, it has given the where this fraud has happened. The revenue, assertion and collection. Revenue is what lamai, which is kept for our working capital. Kept for our, it's one of the key in debtor, and it's for revenue is one of our key thing for fund our working capital. Then therefore it has the examiner given this, then we will look at what is the tax perspective on this, the possible issue for the amount of the fraud has quantified and charged to the income statement. Then in your unseen, this can be happen. Now in the income statement, we don't have the breakup of the expenses. Maybe in the unseen, in the administrative expenses or other operating expenses, wherever, it may be mentioned that this is the value of the fraud. It has charged to the income statement. Or else the separately examiner will provide, there was a fraud in this. The accountant is the particular accountant is looking for charge it to income statement as the allowable deduction. What's your advice on this to the CBE? Anything, if it is quantified and charged to the income statement, if not, examiner is asking the view of them, and I have to argue and put my conclusion. Now, how are we going to write the answer on this? Question whether deductible expenditure or not. There is a fraud. Fraud on what? It is a revenue. Revenue is relevant to our working capital. Then therefore, is this deductible when computing the business income, or this cannot be deductible? Then first one, as per the information given in the PRESEEN, the fraud is relevant to revenue, which is under working capital of CBE. As per section 11, we can only deduct expenditure incurred for the production of income other than capital nature expenditure. If so, that's from the law. Now we need to look at what is the case law. Are there any case law provisions applicable to this? Yes, we will come to that. Third one, apply the case law provisions if required by the given examiner's requirement. Haley and Company versus the Commissioner of Inland Revenue. Special points to be remembered under above case law. These are the points from the decided case law. The loss in this case was allowed. In this case, not our thing, not our revenue fraud. The decided factors in this case law, the loss in this case was allowed to be claimed on the following grounds. In this case law, that loss has claimed because it was kept for the working capital requirement. That money which caused to burglar, then it was kept for the working capital requirement of the organization. What is allowable for income tax computation is not only the expense, even outgoings we can deduct. Outgoings including involuntary outgoings also. The voluntary outgoings, danuvat bhawayen vena dewal wenna puluwan, not danuvatwa. Then fraud is not known by the management. Some person intentionally done it, but it is the involuntary. It cannot be controlled by, even from the safeguards and even from the internal controls it may be, but anyway, unfortunately it has happened. Then the outgoing should be incurred for the production of income. In this case, the outgoing was allowed since the incidental to the business, that original case. In our case also, outgoing is a revenue. Then revenue is the first thing we are using for the production of income. Production of income eකට අත්‍යවශ්‍ය දෙයක් තමයි එළියට ගිහිල්ලා තියෙන්නේ. Then the loss represent working capital. Yes, in our case also it is revenue, then it is working capital and not fixed capital, and therefore not a capital expenditure. In our case also same thing. Then fourth one, apply case law provision to given scenario and provide the conclusion accordingly. I don't know these things. Then එහෙනම් මේ ඔක්කොම ටෙස්ට් කරනවා නම් it's a much and more issues, but it's I mean, according to my gut feel, these some or one, it's as per the given information, it's the reasonably can expect, but it's according to the way of the thinking of the examiner. Then next one, it's given under VRS scheme, the voluntary retirement scheme, which is proposed by the management. All are proposed. The actual thing can be happen at your examination. Application to PRESEEN, where it has mentioned page 3, subtopic 2.2 in the human resources. A voluntary retirement scheme, VRS, has been proposed by the management. They have emphasized the requirement for such a the severance scheme in the light of the global pandemic. Due to this current COVID-19 pandemic situation, they are going to reduce the staff. Then lamai, it's a reduction of the staff. In future, it's a reduction of the expenditure of the staff, but currently lamai, it is the cost of the employment. Come to here. Possible issue 5, tax implication from the side of CBE and from employees. Then api metan depattam balanne epa, we have to look at tax implication from the side of company, CBE, and tax implication from the side of employee. That's why I am telling, even the employment income is not included, you should know about the employment income. Okay, then what's the tax implication on the VRS scheme or VRS from the company and the employee? Okay, here from the side of the company, we will look at first part of the from the side of the CBE. As per the amount allocated to employees, relevant PAYE tax shall be deducted and remitted to IRD. Since due to this VRS scheme, for CBE, they have to pay the employees the compensation. Compensation for loss of office, the gratuity they have to pay, then particular EPF, ETF, whatever that they have provided, they have to pay. Then my concern is on this compensation for loss of office. For VRS, this is one of the typical payment by the company to employees. Here, if it is under the pay limit, then the PAYE tax shall be deducted from this compensation amount and the net amount shall be paid to the employee. Net amount shall be paid to the employee. That's the first thing. Based on if relevant to relevant PAYE tax has been deducted and remitted, or it is below the limit which liable to PAYE tax, analyze based on the information provided in the unseen. Based on that, deduct whether allowable or based on that, decide whether allowable or disallowable. Can you remember under section 10 subsection 2, it has given if the relevant withholding tax has not deducted by the particular payment which subject to WST, it should be what? It should be disallowed. That's why I have included that. As per information of PRESEEN, incurred for the production of income, because in the due to the global pandemic, they are going to reduction of the cost. The employment cost is one of the key thing for the production of income. They are going to reduce that. For that reduction, they are incurring this expenditure. But shall look at the information in the unseen. Anyway, if this tested, you have to look at the particular provisions given in the unseen, whether it is remotely connected or closely connected to the operations of the organization CBE. Then the next one, which is again application to from the side of company on the VRS scheme. Based on the scenario, following case laws can be applied, but strictly based on the information of the unseen lamai. Because this Michel versus Nobel and the associated Portman Cement Manufacturing Company versus Clare, these things are on the at the retirement which they have received the lump sum and ex gratia payment based on these two case laws are there. Therefore, lamai, please note that this is typically based on the information provided, whether these are due to this retirement or due to this VRS scheme, these are provided or not. What's the background you have to look at if so. Then from the side of employees, now lamai, the benefit recipient of the benefit is the employees. From their side, it will get tax under employment income. That part also you have to look at. Then from the side of employees, this is typically part of the employment. This is nothing other than that. This is the part of their employment income. Because of the employment, they are receiving this terminal or a VRS scheme, that benefit. That's the first thing. Okay. Secondly, if the benefit uniformly applicable, advise first schedule para 2 Roman 1 and Roman 2 based on the number of years of contribution or service period. The tax under concessionary tax rate. Can you remember if the compensation is uniformly applicable? If there is a compensation, if this compensation is uniformly applicable to all employees, uniformly applicable to all employees, then this can be tax under concessionary tax rate. If the number of years 20, then 2 million relief, and more than 25 million relief, and likewise there is the reduced tax rates. Then uniformly applicable, we can apply the concessionary rates. If it is a compensation, it is not uniformly applicable. Not uniformly applicable, then thereby you have to apply the normal rates on the employment, whatever that individual taxation. Normal rates for your purpose is first 600,000 at 4% and next 600,000 at 8% and next 600,000 at 12 and next 16 and 20, and balance, on balance it is 24%. On balance it is 24%. Okay. Then for I have quoted from the Act, amount received as compensation for loss of office or employment under a scheme which the Commissioner General considers to be uniformly applicable to all individuals employed by the employer can apply the reduced tax rates. In that 3, if it is not uniformly applicable, liable under normal tax rate slabs. This from the employer and employee side. Now for your own benefit, I have taken the this particular rates from the Inland Revenue Act. From the side of employees, if it is uniformly applicable, concessionary tax rates on retirement benefits. If period of contribution or employment less than 20 years, if uniformly applicable, these are the things. But not only compensation, the gratuity, ETF contribution, these are there, but since this is VRS, I have taken the very specific expenditure which come to the P&L as the, or income statement as the compensation for loss of office. Then on first 2 million no income tax, next 1 million 5% and on balance 10%. And if the more than 20 years, then on first 5 million nothing, next 1 million 5% and the balance 10%. For this kind of the, even this typically employment income, the maybe this case law is also applicable. Check the application of case law provision, Cribb versus Commissioner of Income Tax, Sutherland versus Commissioner of Income Tax, and the Kanaka Sabapati versus Commissioner General of Inland Revenue. All these things are on the employment income, whether it is the profit from employment or not, why it has received, these things are applicable. Then thereby, next I am coming to the scholarships, next issue after the VRS scheme. The next issue is the scholarships to academic staff. Scholarships to the academic staff, where it has mentioned this kind of a scholarship is given to them. It has mentioned in the application to PRESEEN, page 3, subtopic 2.2 under human resources. CBE has access to foreign faculties, especially for final year students. That's for students. That's there in the providing of educational services background. In the undergraduate and postgraduate programs. Now see, meanwhile they are offering that the things to the students, academic staff also receive scholarship to the pursue a master or doctoral program at such foreign faculties. However, in such an instance, they are bonded for a specific number of years to college by signing the MOU. Not only student but academic staff also eligible for this scholarship. Lamai, what's the meaning of scholarship? It's a free education for the academic staff. Who are these academic staff? Employees of CBE. Now, employer has provided scholarships to the employee. Why providing scholarship? Because of his employment in the CBE. Clear? Then Lamai, is this deductible or non-deductible? It is deductible if it is included under the employment benefit of that employee and subject to tax. If it is not included, what is this? Under section 197, Lamai, this is what? Domestic expenditure. This is domestic expenditure. You should know these things. Then possible issue 6, tax implication of scholarships to academic staff. First one, this is part of the employment income of academic staff. Due to the employment of CBE, they have received this benefit. Therefore, subject to PAYE tax or even their individual taxation. If not considered for PAYE tax for the or individual tax from the side of company, or if it has not subject to tax under employment income of that individual, of that employee under individual taxation, this is what? Domestic expenditure under section 197. Thereby disallow when arriving into business income. Pay kapalat nattang for individual taxation if it has not taken as the employment benefit under employment income, therefore Lamai disallow. Because under that circumstances, this is what? Domestic expenditure, where it has mentioned, come to this one, the under section 197, where another person incurs expenditure in making a payment or, payment to or providing any other benefit for an individual. Here, person incurs expenditure in making a payment or providing any other benefit for an individual. In our case, the person is the employer, the person who received the benefit is that particular employee. The expenditure will be domestic expenditure, but except to extend that. මේ පහල කියන දේවල් ඇර ඉතුරු හැමදේම is a domestic. But it has mentioned the payment or benefit shall be incurred in calculating the income of the individual. If it has not incurred in the income of that individual, then what is this? This is domestic expenditure. Please read the PRESEEN. You're reading the unseen carefully, and if such things are given, please adjust accordingly. And next one, the 7, income from research. This is why I have included. This is a the minor point has given in the PRESEEN, but it has some important aspects when it comes to the taxation. Come to here, application to the PRESEEN, which is page 3, subtopic 2.2 under human resources. CBE is well known for its research, and Jagat has made instrumental in set up a joint venture with some leading private sector companies to fund the commercialize its research initiatives. Lamai, what is this? Is it a research and development expenditure which qualified under section 15, or is this other thing? Lamai, this is the research income. Why I am telling that? It's telling CB is well known for its research. That means CB is doing research on behalf of maybe on public, maybe on different institution, like that Monaco University, the Colombo University, they are doing some researches. Likewise, this they are doing. Then when they are doing like this, they are receiving what? Research income. Okay, that's why CB is well known for its research, and Jagat has been instrumental in setting up a joint venture with some leading private sector companies to fund the commercialize its research initiatives. I think it's clear. Then possible issue 7, tax implication of research income. If charge to income statement of CB, first thing please note that this is not an educational service provision. This is the other income. Educational mean I am providing, you are my particular the audience. Maybe O-level, maybe A-level, maybe chartered, maybe CIMA, then whatever, there is a particular audience. For that particular audience, I am giving my that particular syllabus content, syllabus areas which for you. Therefore, the research income is not the part of the educational income. That's one thing. It if included in revenue, eliminate from the computing that predominantly part which computing 80% or more. Please remove this one. Okay. And Lamai, the second thing is that now it's any expenditure incurred on this research. If there is a research income and there is research expenditure, yes, it's incurred for the production of income. That expenditure has incurred for the production of income of the research. But if expenses incurred but there is no research income, then such kind of a situation, that's research expenditure. The expenditure incurred for take that research income, it should be disallowed because there is no production of income. Then next one, other income which shall not recognize under educational income as per the information provided in the PRESEEN. Now these are very, when reading the PRESEEN, these things are captured. Application to PRESEEN, page number 4. Subtopic 2.3 product portfolio. In that given the possible issue 8, income which not under category of educational income. In that hostel fee, it has given, if I have shown it to you in the PRESEEN, here product portfolio. A product portfolio, here we go. Here you can see CB has a student base of approximately 9,000. Course fee makes up to nearly 90%. Even here Lamai given is more than 80%. But of the revenue, the hostel fee, registration fee, library fee and re-sitting fees make up the balance revenue. Then from that also my key concern is the hostel fee. It's not the educational service provision, because whether there is a, it's a part of the business income based on the particular that our service provision for the educational institute, but cannot tell like that also. අපිට කියන්න බෑ hostel එකක් තියෙන්න ඕනේ කියලා education institution එකකට. Then it's based on the facts given actually in the unseen, and the hostel fee, it is not the provision of educational services. And referral fee, there is another thing which I need to explain to you, which is the referral fee. Here, in addition to the main revenue sources stated above, the college earns referral fees from universities in China and Russia for referring Sri Lankan students to follow their MBBS courses. Now, from being a Sri Lankan university or Sri Lankan educational institution, CBE, they are referring students to foreign universities. Now, Lama is a referral fee, it's just like a commission income. Then therefore, it's not the providing of the educational services. This is this kind of a commission income, not form of the providing of educational services. I think it's clear. Now there are some internal issues that need to take over or clear. Then therefore, to take that clearances, they are going to there is a proposal to appoint the senior management consultant. Then due to the senior management consultant, there is a additional cost is coming to the income statement. In that, please look at whether he is a permanent employee or he is a freelance consultant. Then he is a permanent employee, the relevant PAYE tax be deducted if it is the salary is the more than 100,000 per month. If it is a consultancy fee, now there is a resident company is paying consultancy fee for the resident individual. If assume resident individual කෙනෙක් කියලා හිතුවත් non-resident උනත් අදාළ වෙන්නේ. If it is a resident individual, the 5% of the withholding tax under the service fee, it's applicable. Okay, then next one, I think I have, it's a consultancy fee or employment income. You have to look at whether it is consultancy fee or the employment income. Then relevant WST or PAYE tax shall be deducted. Then seventh one, implication on capital revenue nature expenditure. Then why it has given in separately, there is a heading given capital expenditure. Then here application to PRESEEN, which is page 5 of the subtopic 2.4, it's a capital expenditure. Possible issue 9, investing for construction of new building and the computer faculty by obtaining bank loan rupees 6 billion. Here if I have gone for that paragraph in the PRESEEN, original PRESEEN, here we are. Capital, because I need to read this, capital expenditure. The college is investing in the construction of a few new buildings to expand the business and the computer faculty. The student capacity of the college would be increased by 10% when the construction is completed. Project financing loan of rupees 6 million to be disbursed in stages. This is the total value of the loan. It's 6 billion. It's released through stage wise. Be discharged in stages, was obtained from the State Bank as a concessionary rate of 8% in financial year 17-18. Then it's receiving in the financial year 17-18 from its receiving. The bank offered a grace period for a capital and interest payment, and this period expired on 30th March 2021. Then after that, the final disbursement of the loan mentioned above will be received by the CBE at the beginning of financial year 21-22, the amount to be rupees 1,356. Okay, it's a billion, 1.356 billion. The loan will be repaid in 5 years starting from 21-22. Now Lama, you can look at the entire loan value is 6 billion. In that we are receiving a final disbursement 1,356. Then 6 billion minus 1.356 already we have received. That means 17, I guess so, according to the information provided. Therefore, now that is not the critical factor. The critical factor is there is a grace period. Grace period for capital and interest payment. Then therefore, the grace period of capital and interest mean for this interest and capital, even the interest has not charged to the income statement, because it is the liabilities arising on capital and interest is on 31st March 2021 onwards, which is after our year of assessment. On the date it's expired on 31st March 2021, then the liabilities starting from the 1st April 2021. Therefore, Lamai, according to given information, I guess that finance cost has not charged to the income statement because it's under the grace period. Since it is under the grace period, okay. Therefore, very keen about when you are taking the it's finance cost. It seems to be not charged to the income statement due to this grace period, but there is a loan. The 6 billion minus 1.356 billion, then the balance component shall be charged to the it should be in the income or financial position as the liability, as a liability, but according to given information, the particular finance cost relevant to that loan has not charged to the income statement. Okay, then that was I need to take into your. Then we will come to this part. The possible issue 9, investing for construction of new building and the computer faculty by obtaining bank loan rupees 6 billion. What is the tax implications? Loan obtained in 2017-18 under a grace period of capital and interest, which expired on 31st March 2021. As per information provided in PRESEEN, no finance cost charged to the income statement, because Lama, it's a grace period, there is a grace period. Under the grace period, no finance cost and the interest charge, but I don't know whether they have booked or not. Then that part is up to unseen information. Charge to income statement, if charged, that should be disallowed since not qualified under section 12 requirement. In case if it has charged to the income statement, Lamai, don't take it under allowable finance cost part, because the building and the computer faculty is still under work in progress situation. Clear? Then it has not used for the production of income yet. Therefore, any finance cost incurred for not using that asset which not used for the production of income, you cannot claim. Then recognition of capital expenditure on behalf of new construction of the building and computer faculty. That's why I have included Lamai. It has mentioned that they don't have a particular fixed asset register. Therefore, maybe some capital expenditure shall be charged to the income statement also. If so, it is disallowed. For this building and the new building and the computer faculty, capital allowances not eligible. Why? Since not used for the production of income of business, this may be recognized under building work in progress under PPE. Okay, in the PPO, in the financial position, it may recognize under as the building work in progress. Now we will come to next one, the information technology. we will look at what is the application to the PRESEEN. Here the page 5 subtopic 2.5 under information technology, under this possible issue 10, recognition of intangible asset. What is the tax implication? It has given under the information technology the software packages, the bespoke and the ERP package, the detail has given, then we will come to that. Tax implications: if completed and revenue generated as per information of unseen, capital allowances can be claimed based on the actual useful lifetime, or if the actual useful lifetime has not given as per the provisions of the 4th schedule to act. If not completed and not, if it is not completed, then not used, it is not eligible for the capital allowances. Then this is, I am talking about they are going for the distance learning platform. If since they are not cater the market under this the current situation for online education, they don't have a platform. Here 2.5 information technology, I am talking about this. CBE realized that it was ill prepared for COVID-19 in terms of not being able to deliver its programs using digital tools. Therefore, it plans to, therefore what happened? Therefore, it plans to invest in the integrated digital learning platform. In here, when moving to this the digital platform, it is inevitable that there may be excess staff, specifically in the support function where process will be automated. A new brand strategy would need to be formulated with greater focus on the online distance-based education. The finance department has also been experiencing issues with regard to reports required for management decision making. The audit carried out by one of the international university partners revealed serious vulnerabilities related to cyber security and business continuity planning. Clear? Then I have taken this distance learning management platform. If it is the completed, then it is an intangible asset, and if it is used for the production of income, now you can give the capital allowances based on this 4th schedule information. Then next one, that's the recognition of the intangible asset. Lamai, this is talking about that ERP system and the bespoke software which it has given. It is given under accounting and finance function where it has mentioned application to PRESEEN, page 7, subtopic 3.2, accounting and finance. Come to that subtopic, which under original PRESEEN I will take you all through. This is the accounting and finance. Here we go. See, CBE currently uses 2 application software packages. A bespoke package is used for operations, which was developed by the college a few years ago. However, the programmer of this bespoke package has now left. There is a bespoke package, Lamai. The person who developed the package left. Now I am having the doubt about this. If he has left, what happened? Therefore, making new modification to the application was been an issue. Now I have a doubt, without having the without having that modification, can we use this bespoke package? Then an application software is used for accounting, and it is a tier 2 ERP package. Other than the bespoke package, we are having a tier 2 ERP package, the application software. The billing and bank reconciliation facilities in the ERP package have not yet been utilized and the bespoke operation package is not integrated into ERP system. Then that's why I thought whether is from these packages or this bespoke, especially this bespoke package, is it used for the production of income, there is a doubt, but all depends on the information provided in the unseen. Then we will come to the PowerPoint. In here, possible issue 11, recognition of intangible asset. Even is still we will again come to the original PRESEEN. In here, in the financial position, you can see the intangible assets are recognized. There is maybe due to amortization or whatever reason, then there is a decrease. Then anyway, the intangible asset has recognized. Then we will again come to here. Okay, then tax implication. As per the information provided in the PRESEEN, there are two software packages. First one is the bespoke package. Since the developer has left from the company, the new modifications cannot made. Therefore, usage of this package for production of income is doubt. I am not confirmly telling this cannot be used for the production of income. But as per information provided, there is a doubt about this. Please check the position in the unseen. I'm always I'm not taking a chance. Please check the position in the unseen and write or allow, disallow, whatever thing you can do. Position in the unseen and provide capital allowances under intangible asset. Then tier 2 ERP package, as per information in PRESEEN, this is used for production of income, but I don't know what happened in the unseen. Then in the accounting and finance, in that part, it has given they are not maintained in the fixed asset register. That again leads to recognition of capital nature and revenue nature expenditure. Then since they don't have a fixed asset register, we are having a doubt that whether that recorded fixed assets or a property, plant and equipment recorded in the financial position, did they record in a correct value? Then the date of exhibitions are correct. The account in depreciation charge to income statement is correct. These are the issues. Therefore, not maintain a proper fixed asset register is in the subpara 3.2 in the accounting and finance. Tax implication, recognition of capital nature and revenue nature expenditure with reference to the fixed assets may not be done properly. Thereby, any capital nature expenditure charged to the income statement with reference to fixed assets shall be disallowed. We don't know, but something can be happen. Other than above application, the application of section 14, repair and improvement shall apply accordingly. Okay. Then next one, accounting and finance. It is here the assessments. It's not the assessment, it is sending the reason for assessment. Maybe at your exam, the examiner can give these are the assessment. Then for this assessment, what is the taxpayer can do, and maybe a tax administrative review, all these things can be tested. But in the PRESEEN, they have given one key thing. We will look at what is that. Under possible issue 12, reason for the assessments. Intimation letter. In the PRESEEN, if the wording has given intimation letter, the meaning of the intimation letter is the reason for the assessment. Before assessment sending, from the IRD side, that assistant commissioner shall send the reasons for the assessment. Then this is for 2017, 18 and 18, 19. Typically, for 2017, 18, it is under Act number 10 of 2006. Then the 1819 and Act number 24 of 2017. Then I am telling, please go through the tax administration procedure. I have explained the self-assessment, the default assessment, advanced assessment, amended to additional assessment, that part done, administration review done, and for 17-18 part lamai, please refer that provisions in the Act number 10 of 2006. But my question is this. See the wording, I need to go for that original PRESEEN. See the wording, even the wording is there, you have to refer that theoretical part also, okay. Here what given in the PRESEEN? The Department of Inland Revenue has issued a number of intimation letters for year of assessment 17-18 and year of assessment 18-19. What they are telling lamai? Challenging the deductibility of certain expenses and income sources. They are given a reason. Reason is the deductibility of, they are challenging the deductibility of certain expenses and income sources. Now, I have a concern on the assessments and the tax administrative review and the provisions on Act number 10 of 2006. Plus, I have a little doubt that examiner can test by giving particular expenditure and asking from you whether this can be deducted or not, and recognizing the income. Is it under business income or what's the tax treatment? This kind of thing can be tested. That tax administration pattama tamai statutory provision patta test කරන්නත් පුළුවන්, case law patta test කරලා is it deductible or not කියලා අහන්නත් පුළුවන්. Is it part of the income or not කියලා අහන්නත් පුළුවන්. Therefore, you should have a broad understanding on this. Okay. Then we will come to PPT. In here, the tax implications, reason for the intimation letters, the examiner has given challenge in the deductibility of certain expenses and income. Based on the information given in the unseen, you have to adopt the scenario because we don't know what is testing. But the two angles you have to look at. The application of case laws relevant to revenue and capital nature expenditure and recognition of business income is important. But lamai, meanwhile, I am telling, go through tax administrative review, 4 types of the assessment and all these things, please look at. බැලුවා කියලා මේ කිසිම මේ වැරදි දෙයක් සිද්ධ වෙන්නේ නැහැ. Therefore, please go through that part also. Then the next one, I have selected that particular specific adjustment which it can become in your as the allowable and disallowable expenses. More or less it's a disallowable expenditure based on the information given in the PRESEEN. Based on the information given in the PRESEEN, then I have selected these things. We will look at how these things are applicable for your examination. How these things are applicable for your examination. Okay, let me explain. Tax perspective, income tax adjustment in income statement is specific to the PRESEEN. මේවා unseen එකේ තියෙන්නත් පුළුවන් නැති වෙන්නත් පුළුවන්. But based on the PRESEEN, these things I can see. First one, litigation expenses due to non-adhere to the certain partner universities. Not incurred for production of income under section 11, it should be disallowed. In it has given on the ethical part of the PRESEEN, it has given the CB is not adhere to certain partner university, that particular laws and regulation they have entered into. Then if so, penalties that the legal expenses, these are not incurred for the production of income. Second one, penalties and fines, it should be disallowed. If it is paid to government under section 10 subsection 2, 3, because there is an issue in the with the University Grant Commission also. Then any penalty comes under that part, then is penalty to government. If it is not the penalty to government lamai under section 11, it is not incurred for the production of income. Either circumstance you can disallow. Then under section 11, it's not incurred for the production of income. Penalties and fines on breaching the terms of MOU. It is very clearly given in the PRESEEN. There are MOUs. On that MOUs, that particular conditions the CB has breached. Then third one, expenses on payroll fraud based on the information provided in unseen, apply the section 11 and case law provision. Why I have this included? Because there are many issues in the accounting function. There are many issues in the IT, and there is it's as mentioned, there are cyber security issues, lot of things. Then this kind of a frauds can be happen, but it's a less manner, but I have included. Any provision made due to COVID-19 pandemic, any provision, it should be disallowed under section 10 subsection 2 Roman 8. And fifth one, high staff turnover in finance and IT staff. If so, there may be staff training, advertising for staff vacancies and other administration expenses. These are incurred for the production of income, therefore allowable deduction. Trade debtor impairment provision. Any impairment which is a provision, it should be disallowed under section 10 subsection 2 Roman 8. When it comes to the trade debtor write-off or impairment, please look at, if it is charged to the income statement as the write-off, please look at whether particular actions are taken to collect, and that for particular students, that the student is studying, is still in the education institute, likewise please check. Then this is the other possible adjustment in your the income or tax computation. Adjustments. Tax perspective, other possible tax adjustments. You have to start from the profit before tax. Based on the PRESEEN information, you can see your profit before tax in the income statement. Where the income statement, I think it was in here. The profit before tax 552,067,705. This is where, okay. Then that's your starting figure. Then capital allowances, balance in allowance, assessable charge under section 16 and 4th schedule to act and the transitional provision. Assets acquired prior to 1st April 2018, if it is tested, if the total capital allowance amount given like in the previous past papers, but may be calculated. If so, you have to apply that the provision. Then accounting profit on disposal of PP shall be removed. Remove from the PBT, and the accounting loss should be added back. Then assessable charge and balancing allowance you have to adjust. The accounting depreciation of PP and amortization of intangible asset, it should be disallowed. Gratuity provision, it should be disallowed, and Lamai, please keep in mind the payment of gratuity. Payment of gratuity, make a karunakala hoyanda lamai. You all not computing this. Then don't do that. The opening gratuity, if we have gone for the PRESEEN, here in the financial position, under retirement benefit obligation, opening is there, closing is there, provision is given to the given by the in the actual examination, and there is OCI. In the OCI, I think the actuarial part, the other comprehensive income, net of tax, the gratuity part, if it is the on actuarial gain loss, that part is there, you have to take, but it is I think it is not given here. Then you have to take like that, and you have to compute the payment of gratuity, and don't forget that, okay. That's why I given compute the payment of gratuity, taking the information provided in the PRESEEN as well as the unseen. Then the next one, if there is an inventory write-off, maybe the books, maybe the study materials, if they are outdated, it can be write-off, then lamai, it should be allowable deduction. These things you all know. The fair value gains, losses on financial assets, if anything charged to income statement, gain, it's unrealized, it should be removed from the PBT. If it is a loss, it should be disallowed. Then any write-off, impairment of trade debtor, I have explained this. Then restriction of finance cost under section 18 is important. On that 6 billion loan story I have explained, then I am not taking it again. However, I need to take this. First you have to identify the finance cost which is permitted under section 12. Finance cost incurred for the production of income, it's a one thing. Second thing is if the finance cost is incurred for purchased or acquired an asset, that asset shall be used in the production of income today. That's mean in your year of assessment. That's the first thing. Eka qualify වෙනවා නම් take the corresponding finance cost and take the capital or a borrowing which relevant to this corresponding finance cost. The finance cost නැති borrowing එහෙම ගන්න එපා. That's why I told if there is that 6 billion loan party is there, don't take that. හැබැයි මෙතන finance cost එක තියෙනවා නම් ගන්න. But in that case also that 12 under section 12 that finance cost is not eligible to claim because the building and the computer faculty is not completed. Then after that you have to apply section 18. What's the section 18 requirement? Apply the restriction which is share capital plus reserves into 4 times. Why is 4 times? Because the nature is the service sector. Reserves other than revaluation reserve, in their revaluation reserve of 750 million, when computing this one, don't take this, okay? Reserve excludes revaluation reserve arising from the revaluation of asset. Done. Then income tax case laws, lamai I would say all the income tax case laws, I am not really impressed on the plant that 2 case laws. අහන්න පුළුවන් ඒ වුණාට but what I need to tell the adventure or concern in the nature of trade, capital and revenue nature expenditure, expenses incurred in production of profit and income and plant. Lamai please look at all these case laws carefully before the examination. In that I have highlighted based on the scenario I have highlighted the 3 case laws when recognizing capital and revenue nature expenditure under section 11, under section 14 and case law you have to apply because there is issue in the capital expenditure and they don't have a fixed asset register. Then likewise these law shipping company versus CIR, Odeon Associated Theatre and the versus Jones, Haley and the company versus Commission of Inland Revenue. I have discussed the last one, but please go through all case laws. The examiner is free to prepare the examination paper out of your syllabus. Then Lama, you should know 100% of your syllabus. Then these are the 2 that are the case laws I have taken. Then expenses we have discussed. Now we will look at what are the income you should need to consider other than that main income. In here, under other operating income, there may be accounting profit on sale of fixed asset, you have to remove that. Rent income, please look at whether it's investment income or effectively connected to the business. If it is investment income, remove from the PBT and take the investment income. If it is effectively connected to the business, nothing to do. Then dividend income, it is more or less investment income, remove from the PBT and take it under investment income, but keep in mind it is what? Final withholding payment. Foreign exchange gain losses, check the nature whether it's capital or revenue nature, because that foreign universities we are doing the transaction, there may be exchange gain losses are there, then it is the capital or revenue, then revenue nature you can deduct. Then finance income it can be have the interest income from fixed deposit, savings, treasury bills, Then for treasury bills, no withholding tax, but for other, please keep in mind the relevant withholding tax 5% is deducting at source. Therefore, the gross interest you should recognize under investment income, and you have to take the withholding tax credit. Okay, then this is the end of the part of the income tax. I think Lamai, I have done a hell a lot based on the pre-scene, and therefore the pass this paper is up to you all. Then I need to take the value added tax part, not much, very simple. The supply of educational services are exempted from VAT. Then don't be happy. Exempt කියලා test කරන්න නැතුව ඉන්න පුළුවන්. No. The examiner can test these things like in a manner that for testing your knowledge on how to apply the input VAT concept with relevant to taxable supply versus exempted supply. Now in the pre-scene Lama, it has given the 90% from educational services and other services also given. Now for other than educational services Lama, the VAT is chargeable. That's why in the pre-scene it has given CBE has registered for VAT and NBT. ඉතින් VAT වලට liable වෙන turnover එකක් නැතුව ළමයි, it's no need to register for VAT නේ. Then even they have registered for VAT. Therefore, please have this perspective. The main income is exempted under part 2 of the first schedule, para B, the supply of educational services provided by any person or partnership. It is exempted. Then importance of identifying the exemption while claiming of input VAT. Even we have done this Lamai, many questions. Almost all the questions from the previous syllabus now in new syllabus I have completed under this webinar series. Okay. Then input VAT definition I have given. Here my question is, can we claim input VAT on exempted supplies? My answer is no. Then if so, other important points or not, zero rated supply, section 7. In case if there are zero rated supplies, then claimability of input VAT, any input VAT on zero rated supplies shall be claimable, since zero rated supplies are considered as what? It's a taxable supply. That's on the VAT. Then on NBT. NBT lamai, educational services are liable for NBT. It is under the provisions of service. The NBT rate is the 2%. Anyway, like other persons, liable threshold per quarter is 3 million, per annum is the 12 million. Okay. Then this is the end of the discussion of June 2021 pre-scene analysis. Lamai, I have taken much more time and explain all the possible things. Then if anything of this don't test, don't blame me, but I think it's a explanative analysis. Therefore, please use this. This is your company till end of your examination. Therefore, touch with this pre-scene, and for 50 marks question based on this, then whatever everything in a theory and question what we have done, and you have Patrice, and add this pre-scene analysis to this that part and Patrice well before the examination. Okay, then this is the end of the pre-scene analysis for June 2021 examination. Thank you very much.